Hello everyone, and welcome to your Money Q&A question of the day. I'm your host, Stacy Johnson. This question is brought to you by MoneyTalksNews.com. We've been serving up the best in personal finance news and advice since 1991. Let's get to today's question. It comes from V. V says, what do you use for the money that is not in stocks? Bond interest rates are terrible. I have a real problem investing where the upside is non-existent and the downside is both probable and major. So where do you go with your money? Quick lesson on bonds. Everyone familiar with bonds? Let me tell you how they work. When interest rates are going down, bond prices are going up. When interest rates are going up, like they are now, bond prices are going down. Imagine a seesaw. Interest rates up, bond prices down. Interest rates down, bond prices up. So what we have now is a period of rising interest rates, and what V is expressing is her fear that having money in bonds is going to become worthless because as market interest rates rise, those bond values are going to go down. So she's asked me what she should do. What I do, V, is I'm basically in money market a lot. I don't have a lot of bonds. I have a lot of money in the stock market, but I have a lot of money basically in cash in money market. That has been paying virtually nothing the last few years, right? But now that interest rates are starting to rise, the 10-year bond is approaching 3% as I speak. Now that those interest rates are starting to rise, my money market's starting to pay a little more. And I'm not going to be buying bonds. If I am going to buy them, suggestion number 2, buy very short-term bonds. Will the interest rates suck? Yes, they will. But it's better than watching your principal go down when you invest in longer-term bonds. So if I were a bond investor, what I would be doing is buying a short-term bond fund or very short-term bonds. Think T-bills, 1-year T-bills, something like that. You can also ladder, and laddering means having some really short-term, so you've always got something coming due, and having some longer-term that pays higher rates if you need that income to live on. That's called laddering, each end of the spectrum. Another thing you might try is alternative investments. For example, peer-to-peer lending. You can go to a place like Prosper or Lending Club and you can lend out your money, not to one person, but you can get a whole portfolio of people. Like instead of lending one person $1,000, you can lend 100 people $10. So there's not as much risk and you can collect a lot more interest that way and it's relatively short term. So if you haven't looked at that, V, take a look at that. Might suit you. Good bond alternative. In the meantime, all you can do, keep your maturities short, wait for interest rates to rise, and then maybe lock in some of that money in longer-term bonds. Does that make sense? I hope so. We will close today, as we usually do, with our financial quote. This one comes from Tennessee Williams, and here's what he had to say. You can be young without money, but you can't be old without it. Tennessee, you got that right. Hey guys, make it a profitable day, and meet me right here next time.